Diversified miner African Rainbow Minerals' first half headline earnings have increased by 24% to 1.94 billion rand, and that driven mainly by increased sales volumes in iron ore. Earlier today, I spoke to the company's CEO, Wilkens, and asked him about the company's performance.
We had 30% increase in volumes, and that gave us the 24% increases. As you rightly said, a lot of that was on the iron ore side. And the iron ore mine that we're busy building is well ahead of schedule, and that allowed us then to sell more iron ore where the market was available for that and the prices were good. But overall in the company, our strategy to grow aggressively, that's continuing. We're busy with the ramp up. The coal is now almost there. We're busy with Nkomati. The Kumani mine would now ramp up to the 16 million tons as we design it. And we're busy with building the copper mine in Zambia, and that's progressing on target as well. So there's a lot more to come in the next few 6 quarters.
As you've highlighted, very aggressive in terms of your project pipelines and the kind of ramp up that we're anticipating from the company, Andre, moving into the second half. That's got to say something about the demand scenario that you're experiencing out there. Where exactly are you experiencing that demand from, and what's fueling the kind of aggressive capex spend we're seeing and project expansion?
When one look at the ferrous metals, our company has been in the markets for some 78 years. So there's a lot of long-term relationship with clients, and the demand for iron ore is still strong, and we're also achieving very, very good prices there. We're also managing to move our manganese ore. The prices was depressed and they're starting to come back a little bit now. But because of the quality of our manganese, we've sold everything that we've mined this year. The one area that has got more of a negative effect, that's actually the chrome prices, where the chrome prices is currently about 31% lower than the previous 6 months reporting period. And then the other metals like platinum, even with the weaker rand, the platinum prices are quite flat at the moment.
Take us through sustainability of prices as you see it, because you've outlined that demand scenario there. But, you know, in the commentary going through your results this morning, sustainability of those prices have to be questioned in a context where already we've had uncertainty in the global markets continuing to put pressure on demand for commodities and thus commodity prices themselves, Andre.
If I look a little bit longer term ahead of us, there's certainly a fair amount of iron ore projects coming onto line, and we expect that the iron ore, the current spot prices in the order of 140, 150 over the next 3 to 4 years would come back to about $100. On the other hand, on the manganese side is with steel production growing 5 to 7% per year, we think we will be very well with our good quality with the good quality manganese we have. We would be very well positioned to benefit out of that increase over time. And if one linked that, Alishia, to the latest statement by our government, with the strong focus and the huge amount of resources that would be invested to expand our rail, port, and also electricity resources, ARM would be very well positioned to contribute in those expansions.